So the S&P just did a very important bullish reversal pattern, and it is about to finally reverse the bear trend. Recently, it has been correcting, and although this triggers a yellow sign for us, the index has yet to lose its key support levels in order to materialize a clearer bearish structure. So what's next for the S&P? Is this correction just a pullback or the beginning of another crash? In this video, we will study the most important key points on the S&P and work with a few scenarios. Welcome to the Finance Hydra channel. My name is Nathan. Let's take a look at the S&P. First, the S&P did an upwards breakout from this descending channel, evidenced by the purple trend lines over here connecting the previous support and top levels on the S&P. This is the weekly chart, by the way. Every single candle represents 1 week. In addition, we did trigger a bullish pivot point. The pivot point was 4100. By breaking the 4100, the S&P did, for the first time since this bear market started, since January 2022, it did for the first time a crystal clear higher high, higher low. And right now, this week, we are about to trigger a golden cross, as the 50-period moving average is breaking the 200 moving average upwards. So this is a classic golden cross indicator. It is the third sign that yes, the index is indeed reversing the bear market. So let's take a deeper look on the index. In the daily chart, we see that the index is correcting, okay? Last week, it did a high around 41.97, 41.96 over here, and right now we are correcting. However, as long as the index remains above 4100, this pullback is going to be just a weak and harmless pullback. In order for the index to materialize a sharper correction, we gotta lose 4100. And guess what? It seems we are reacting above the 4100. If we take a look at the 1-hour chart over here in the short term, yes, the index lost the 21 EMA. However, we found a crystal clear support level at 4100 and we are trying to stabilize in this area. If the index does a bullish candlestick pattern above the 4100, then probably the bullish momentum will persist a little bit longer, and the next technical target on the index is 4218 in the midterm for the next couple of days. Why 4218? Because this key point is an open gap on the index from August 2022. So remember, gaps work as magnets for the price when we see a crystal clear bullish reversal, okay? Just like in this case. So, all right, we are supposed to hit 4218, but what if we lose the 4100? Could this be the beginning of another crash on the index? I mean, in the weekly chart, if we lose this key point over here, could we crash to much lower price levels? Yes, we could. The problem is, if we lose 4100, we see a dual support level in the midterm around the 21 MA and around 4015, this red line over here. This area is supposed to be a dual support level on the index, and any bullish reaction in this area might be just an opportunity to buy, because the index is in a bull trend. It is doing higher highs, higher lows above the 21 EMA. So any pullback to this support level would be just an opportunity to buy. In addition, we lack bearish structures. I mean, so far, we only see higher highs, higher lows, right? We only see this going on the S&P. We don't see lower highs, lower lows. If we do a pullback, if we bounce, doing a lower high and then losing the previous bottom level like this, then okay, this is a bearish reversal structure in the daily chart and possibly an indicator that yes, the index is going to trigger a sharper pullback in the long term as well, namely in the weekly chart. If we see a sharper pullback in the weekly chart, the index could easily drop below the 4K area, retesting 3950 around this area over here, around the moving averages in the weekly chart and this purple trend line over here, which was a previous top level 1, 2, 3, 4, 5 times in the past. This point is supposed to work as a support level in the future, in the long term, if we actually trigger a crystal clear bearish reversal structure in the daily chart. Why is this key point supposed to be a support level? Because according to the principle of polarity in technical analysis, previous resistances are supposed to work as future support levels and vice versa. This happens many times, and this happened recently on the S&P around the 4100. If we take a look at the 4100 is working as a support level for us right now. It did work as a resistance multiple times in the past. So okay, according to the principle of polarity, we could drop to much lower price levels. However, we have yet to see a crystal clear bearish reversal structure. Remember, my dear friends, trading is reactive, it is not predictive. So we gotta wait for more confirmation. And remember to join the top 5% family. We are literally the top 5% of traders that can actually make money while beating this market. Public track record, guys, public track record. Check my website, the link is in the description. Now, in the lack of bearish structures, all that we can do, all that we can assume is that yes, the index will just remain bullish and 4218 is the next technical target. Oh Nathan, what if we don't trigger any sharper pullback? What if the index remains incredibly bullish and breaks the 4218 over here? In this scenario, the index will probably retest 4300, which is the next technical resistance from August 2022 over here. So this is the next technical target on the index, and it is the technical target for this bullish pivot point in the weekly chart as well. And of course, if you are still watching this video and you are not my subscriber, come on, just subscribe. You probably like it, the video so far. So subscribe this channel, click on the like button to support me. I'm gonna keep you guys updated every single day on this channel. Daily analysis. I invite you to join our community. Thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow.